Hi traders, and welcome back to a new video from Trading.
Today I explain to you a very profitable 1-minute scalping strategy.
Let's get started right away. With this strategy, one use 3 indicators. I use the moving average exponential with the abbreviation EMA twice. So I click this one twice. The third indicator we use is the ATR indicator. The first moving average indicator has a length of 200. Press the settings of the indicator and then enter 200 at the length. The second EMA we use has a length of 50. Press the settings for this as well and now fill in at length 50. I make the color of this one green. The settings of the ATR indicator are default and do not need to be changed. We use a risk-reward ratio of 1.5 for this indicator. This means that we risk 1 on a stop loss and reward 1.5 on a profitable position. It is always up to you how much you want to risk on a stop loss. For example, this could be $100. If you want to risk $100 on a stop loss, then you will win back $150 on a profitable position. We base our stop loss in this strategy on the value of the ATR. Here on the right side of the screen we see that the ATR has a value, and every time we open a position we look at the value of the ATR and base our stop loss and take profit on that. This will become clear later in the video. The rules of this strategy are simple. Namely, what we are waiting for is simply a cross between the 250 EMA on the 1-minute time frame. Make sure you are on the right time frame. If the 50 EMA ends up above the 200, then that is a signal of a rising price. Then we want to see a pullback towards the 50 or 200 EMA as we see here. Once the price makes a pullback, we simply wait for a reversal before we can open a buying position. A reversal can be characterized by the price first falling through the 50 or 200 EMA and then rising again. Here we see that the price first drops below the 50 EMA and then rises again above it. This is our confirmation for opening a buy position. Once we have this confirmation, we look at the value of the ATR at that time. We see that the ATR has a value of 11.6. We now open a buy position and set our stop loss to twice the value of the ATR. 2 times 11.6 is 23.20. In the stop loss tool, you can find the value at the bottom left. So now we drag it to 23.6. Sometimes you do not always come out exactly. Then you can choose to round off the value. Next, we set our take profit target now 3 times as high as the value of the ATR. So that is 3 times 11.60, which comes out to a value of 34.8. We see that this position was profitably closed within 3 minutes. The advantage of the ATR indicator is that you do not have to worry about where exactly to place your stop loss. This is because many novice traders don't know exactly what to do with the stop loss. Does it have to be below the last low? Or should the stop loss be placed slightly above or, on the contrary, much further below it? If you simply use the ATR indicator, you'll take away all those worries. The ATR simply calculates for you at which place the stop loss and take profit target should be. Now that we have placed a profitable position, we wait again for a crossing between the 250 EMA. So we do not open multiple positions every time the price makes a drop. You can also execute this strategy in a downtrend. In that case, if you want to execute a sell position, you have to wait until the 50 EMA now drops below the 200 EMA. So again, we want to see a cross between the lines, but now in the opposite direction, as you can see here on the price. We see a cross between the lines, after which the price makes a drop back towards the 200 EMA. After the price rose over the 50 and 200 EMA, it dropped below it again, which gave us the confirmation to open a sell position. At the close of the candle, I open my selling position and look at how much the ATR is at. It is at 11.9. We now do 2 times 11.9 and we use that as our stop loss. 2 times 11.9 is 23.8. And as a take profit target we do 3 times the size of the ATR. So that's 3 times 11.9 is 35.7.
As you can see, this was again a profitable position which was closed within 5 minutes.
By betting on only small price movements, you might think that it is not very profitable.
But many traders forget that levers can give you a very big advantage.
Imagine if a small price movement made you earn only 0.1%.
That in itself is not much. But if you use a lever of, say, 20, then you won't make 0.1% but as much as 2% profit in just a few minutes. Levers can be used on, for example, the crypto exchange Bybit on which I trade myself.
In the trading interface, you can easily check how many levers you want to use. This can be up to a leverage of 100. What many people forget with strategies is that you don't just keep an eye on one price.
Some traders keep an eye on 50 crypto prices and open 100 buy or sell positions every day. If you look at it this way, a profit of 0.1% per position is of course enormous.
If you also want to trade on Bybit, there is a link in the description. You can also execute this strategy on Bybit via the chart as you can see. If you don't want to trade at all, then of course you can always use our premium subscription.
With our premium subscription, you trade with our positions, and if you don't make a profit, you get your subscription fee back. More information can be found on our website.
I want to thank you for watching the video, and I look forward to seeing you next week.